So as you can tell, I wasn't born in this country. I am Sephardic. I was born in Morocco. And as a young man, I guess I was very talented in mathematics. And that's how I got my break on Wall Street back in the mid 80s, late 80s. Was the time where, which may sound surprising to many of you, the personal computer was getting introduced onto the trading floor. Right, back in the mid 80s, traders did not have computers. They had these little boxes which provided live pricing. So because I had a very strong math background, I was hired by Merrill Lynch initially in Paris, but then they sent me to New York, and obviously, New York is a much bigger market. And certainly, I think the lesson for me at the time was that if you have a very defined skill that few other people have, that will certainly help you to get, started in what at the time was certainly a very competitive environment. So at the time, the idea was that the same way you are able to buy and sell, shares on the stock market, you wanted to be able to buy and sell effectively partnership interests in hedge funds. The idea sounded appealing, and they raised a lot of money to develop the platform, but it was a failure. And the VC firm that was a big investor in that firm approached me to try to reinvent the technology. So that's how I got involved in hedge funds, right? From derivatives to risk management software to technology that was trying to develop a marketplace for hedge funds into launching a hedge fund, an investable hedge fund index. So it became much harder to make money in hedge funds, I was at the time the COO of the company. One of my close friends and partners was the CIO of the company. So we decided that we saw the writing on the wall that it would be very hard to continue making money for investors, for ourselves in the hedge fund space. We wanted to turn the company into something else. The other partners didn't want to, so we wished them sei gesund. We resigned, and so he doesn't play golf, I don't play golf, so we decided that we would instead take some of our own capital and invest in real estate, and more particularly, we wanted to invest in residential real estate. So we did not pick that at random, obviously. Number one, we expected that interest rates would remain low for a long time, and rates will continue going lower. And when rates are low, you want to be a borrower. The best place to be a borrower is obviously real estate, all right? The second point, in no particular order of importance, real estate is the most tax efficient investment strategy in the world, in the US, when you are a US person. The other reason was that, and again, I think the COVID pandemic has illustrated that. We've seen during the pandemic that you don't need hotels, you don't need offices, you don't need retail, but you will always need to sleep somewhere, all right? You always need to sleep somewhere. That's something that no technology will ever be able to displace, all right? So we decided that from a risk-return point of view, the best segment within real estate was residential.